Hi everybody, Alex Eloy here from Expert Forex, and in this video I'm going to teach you how I tripled my account 10 times in 2 days this week. And furthermore, I'm going to review every single trade to give you an idea of how my technique works. Okay, so how does this triple in one trade technique work? Firstly, what you do is you identify a trade that has potential of a good move in one direction, and we're talking about a move of about 150 pips. So you would enter this trade, and as the trade goes successful, you would add additional trades to it to increase the lot sizing that is being traded, and that is what we call a top-up trade. And you would do 3 of these top-up trades in the process of the price moving towards your target. In the meantime, you'd be following the transaction with a break-even stop, so that the transaction is basically risk-free after the first top-up. And when all 4 of the transactions hit the target, which is a common target, your account will be tripled. In other words, you will make double the amount of gain in your account. Now, this is best seen in practical examples, so I've got 10 of those examples to show you. Now, this diagram shows you the process there. The initial trade is entered. It's got a stop loss and a target. Then the second trade is entered. The stop loss moves up to that point where number 2 is, so that if this trade is stopped out and that trade is stopped out, they'll be stopped out at break even. In other words, the first trade would make a profit and the second trade would make a loss. That cancels them out. Then the third trade would be opened, and the same would apply. The break even stop would move up, and then the fourth trade would be opened and the break even stop would move up even more. So if the price comes back and hits that fourth line, all 4 of the transactions will be closed at a break-even level. That's what's so fantastic about this technique. It is essentially a risk-free technique except for the initial trade's stop. Now, I use a very special tool called the double in a day trading tool, and we have a very special owners forum in our premium forum. And the areas we look at in this forum is creating great double in a day strategies, identifying great instruments to trade, double in a day entry techniques, and we look at optimization, back testing, and forward trading, some of those techniques. And then, very important, we have an automated version of this trading. I'll show you that in a little bit more detail later on. And then in the forum, there's a lot of double in a day discussion. So we have a forum for this particular activity. And here's the automated version of the double in a day activity. You can see this video shows the true potential of this particular technique. Okay, so now we're going to look at some of the trades. You'll see that the most common double in a day entry techniques are support and resistance bounces, breakout retests, so it would break out and retest the breakout, S-action formations, which is basically a retest, but we'll have a look at that one, continuation breakouts, double top or double bottom price formations, and trend line bounces and breakouts. Now, those are the major ones. There are other ones, but those are the major ones that happen. And as you can see, these are old-fashioned support and resistance techniques. So now you can see the strategy in action, and here are the actual extracts from the account, and you can see these are actual trades. There's the order number, the broker's order number, there's the time and date that the place was traded, the direction, the sizing of the trade, the instrument used, the price that the entry took place at, the exit, which is all this, as you can see, the same as I've explained, and and then the profit level. And if you add those profit levels up, you'll see they come to $2,000. I use a $1,000 account, so I have tripled my account by having a gain of $2,000. And here's a view of this transaction. The entry took place over there at number 1. There's the first top up, there's the second top up, and there's the third top up, and they all hit the target over there, generating that $2,000 gain. The entry was basically a retest of a breakout area. It retested it and then shot up. It was a confluence between a trend line and a support and resistance line. Okay, now here's a support bounce, and there it bounced a little bit early there, and it survived the stop, and there's the top up, the second top up and the third top up, and they then went on to hit the target. Okay, now the third transaction is almost a double top. It's like there's the top, then try to do another top and then trended downwards. But this is actually a retest. You can see there was quite a strong resistance area. It broke through that resistance, but then it retested the resistance, and that's where the entry took place. So there's the entry, there's the 3 top ups, and there's the exit. And there are the results of that transaction. And in this case, it was again the US 30. Again, a double top here, or you can actually regard it as a retest of a resistance area. So it tested there, and then it retested there. That was where the entry took place, and there are the 3 top ups, and there's the exit. And there is the transaction details, the sizing. The order of the transactions really depend on how the history is sorted, so sometimes they're not in the correct order. Okay, so the next transaction, again, very similar to the previous, but just in reverse. Here's it's a double bottom entry, and supported by a trend line type of bounce. And there's the entry, there's the 3 top ups, and there is the exit. Okay, and you'll note the dates. The dates are all the 2nd of December and the 3rd of December. All of these transactions took place in 2 days, and they only used the NASDAQ 100 and the US 30. So only 2 instruments were used, and there's a reason for that. Now this one, I see I didn't draw the support area, but it's basically a support bounce, and the bounce took place, and there were 3 top ups, and there is the exit. So obviously, if you've noted that the instrument the instruments that you use are critical for this technique. You have to find instruments that trend quite strongly, very important. And there's also something that is not seen in these charts, and that is the time of day. There is a time of day element when most of these instruments will tend to trend. So that is a very important element that you don't see that is used in these techniques. Okay, and here's a continuation. There's the flagpole, there's the flag, and then there's a continuation trade, and there's the entry on confirmation of the breakout, and the 3 top ups and the exit at a nice $2,000 gain. Now what I do with these trades is I withdraw my gains straight away. And that's a conservative way of doing things, but money in the bank is more secure than money in your broker account. Okay, another trade, and here is I haven't really explained the S shape. So the S shape goes like this. You see there's the top of the S, there's the bottom of the S, and it's basically a retest type of formation, and there it came back and retested that particular support and resistance level. That's where the entry took place, and there are the 3 top ups, and there's the exit. Now here's another S. See, there's the the first, and then it came back and retested. And again, S is basically a retest type of formation. That's where the entry took place, and the 3 top-ups happened there, and there is the total closure, where all of them closed at exactly the same time and place and price. Okay, this might be close to the last one. This was actually anticipated to be a trend line bounce. There's the trend line coming from the top, anticipated to be a trend line bounce. It went on a little bit further, missed the stop, thank goodness, and then was stopped up 3 times and then hit the target. Again, important to use a instrument that is likely to trend 150 pips. This is what we're looking at. All of these trades are 150 pip trends. Okay, so that's the end of the 10 trades that were taken in those 2 days that all 10 of them doubled. Here's a description that I've used in a previous video, the previous to this, so I'm not going to cover it again. I've already explained how the top-up process happens. But what we're going to look at is the specific strategy I used for these 10 trades. And they will all use the same strategy. And this is what you get when you use the double in a day strategy generator, which is the tool that I use. So what I do is I tell the generator which instrument I'm trading, which direction I want to trade. I'm going to use a market value, market price. So when I hit accept, it will immediately enter the trade. And my trend is, as I've mentioned, 150 pips. And my account size that I'm going to use is a $1,000 account. Then what am I going to risk? So I'm going to risk 5% of my account. Not a huge amount, but I am going for a target of 205%, and that will give me $2,050. Now, why is slightly bigger than 200? Because there are spread variations that can cause me to earn less than the doubling amount. So I try to go slightly over the doubling amount to create a bit of safety. Then the EA goes away and it says, oh, the current spread is that, the margin that I need for one lot is that, and then a bit like AI, it then goes and creates a strategy. And it says, okay, if you start here, you need so many lots and you're going to generate so much income when it hits the target. If you then top up at 35% on the way to the target, you're going to need so many lots and you will generate so much money. And then 50%, so much money, and 65%, so much money. Now you'll see that the lot sizing gets pretty high. How can we afford to have such lot sizing? Is that the gains get added as you're going along. So the gains themselves generate the finance that we need to use these high lots. So that is the strategy, and if when successful, that strategy will result in $2,050 at a risk of $50. Now here's the most important part about strategy generation. Remember the break-even stops and the initial stops. We want them to be more or less at the same level. So it actually then goes on and tells us, yes, your safety margin, which is basically your stop size, is more or less balanced. So the initial stop is 19 pips. The break-even, when the first break-even gets created, there's a margin or stop size of 20 pips. When the second one gets created, and again 20 pips, and when the third one gets created, 21 pips. So that is the secret of these strategies. You've got to get these nicely balanced. It then goes on further and it tells you if you get stopped out, you're going to make a loss of $49.97 based on the lot sizing we recommend. Then it says if you stopped out at the first break-even level, the profit from the one will balance out with the profit from the other, and you'll make no profit. That's what a break-even stop is all about. And when the second top-up level is reached and that one gets stopped out, again it works out. There are 3 open trades. It works out the profits from 2 of the transactions will cancel out the loss of the other transaction, and you'll make a 2 cents gain. And then at the last top-up, which is the third top-up, there are now 4 open transactions, and it works out exactly what level the stop should be to give you a 9 cents gain. So basically, as you can see, this is a risk-free strategy, and you're only risking the initial trade. And then when you're happy with this, which I was, I just click on accept when I want to enter a deal. And if I want to do a buy, I just change that to a buy and click on accept, and boom, the entry is made. And the EA manages this part of the transaction. I can then walk away, and the top-ups will happen automatically, the break-even stops will be adjusted, and so on and so on. So it's highly automated once you have identified your entry. I must stress, the trader has to identify the entry, and I've shown you how some techniques that are used to identify entries. The trader has to identify the entry, but the EA will manage the transaction from there on. Okay, so now if you want to use this tool and you want to become an owner of it, you can go to the web page. It is the Double in a Day the robot. You can go and purchase it on this particular page, but it is also included in a very special bundle that we've got going at the moment for 83% off. So you can purchase, what have we got here, 11 plus 5. You can purchase 16 trading tools and EAs for just under $1,000, which is an 83% discount on the full price. So the other alternative is to buy the bundle, which includes the Double in a Day. Yeah. Now I did show you the automated version of the EA, and here it is. It's called the RSI Envelope Trader. You can see that it has fantastic potential there, and it has quite a number of entry techniques that can be used. You can purchase the automated version of the of this top-up technique using this marketing page that's on your screen right now. But this particular EA is also included in that 83% off bundle. There it is. It's the RSI envelope. There it is. So if you buy this bundle, you get both the automated version and the manual trading version, where you determine the entry and it will manage the exits. So pretty good deal, this bundle, and it's currently 83% off. Okay, I hope you've enjoyed this video, and I hope I've given you a sense that these trades are tricky but not rocket science. We've used old-fashioned support and resistance techniques to enter the trades, and we've used an EA to manage those trades for us. If you're not at that trading level, we have an alternative, which is an automated version of the Double in a Day top-up strategy, using envelopes and using the RSI. The other thing is, once you've purchased those EAs, it would be good to join our premium forum and participate in that forum that we've created specially for top-up trading techniques. So from me, Alex Eloy, cheerio. Just a reminder to join our Expert Forex community of over 30,000 Forex traders. It is free. So don't miss out on any new developments. A link is in the description of the video.